I wanted to share with you what I look at throughout the day to determine whether I should be floating your loan or locking your loan. This is a service I use that actually tracks the bond market for me. This is bond pricing. When bond pricing goes down, it means rates are going up. When bond pricing goes up, it means rates are going down. So this helps me to see where the bond pricing is going throughout the day. These green and red lines are support lines and resistance lines. When bond pricing is going down, I expect and hope that the bond prices will hold at these support levels and then will turn around and bounce back up. When bond prices are scooting or along the top of these two resistance bands, I'm hoping that bond pricing is going to break through and it's going to make rates go down. Let's take a look at an example for today. Today, the bond prices are right up against the lower resistance band. It's telling me that it's probably a good time to lock. I mean, there's a chance tomorrow that the bond pricing could break through this resistance and we might see a little bit better pricing. But lately, I'm talking from the end of March through today, bonds have really been trading in this channel here, up and down. And so we're just basically getting little advantages as we track the bond pricing throughout the day. Here, the market's closed. The market closed up 22 basis points, which means we had a strong closing today. We're going to see what that looks like first thing in the morning. Green arrow up is good for rates. It means rates are going down. Now, the other thing that helps me out is this little pie chart down here. It's a community consensus of all the users that use this tool, and they're basically giving their 2 cents. Should we float? Should we lock? I don't really go by this, but it does give me a kind of a good indication of the confidence level of mortgage professionals in the marketplace. Now, throughout the day, the rates are fluctuating. You're going to get your rate sheet or your rate update from me in the morning, usually around 10 o'clock. After that point, the rates are going to go up or down, and the pricing may even change several times a day. Pricing changes when these rate alerts occur. Now, any activity above this red line is good for interest rates. It means that the pressure is towards lower interest rates when the market's moving in an upward direction as far as bond prices go. Anything below the red line, bad, okay? And throughout the day, based on where the market's moving, the lenders are going to reprice. So at this point in time today, lenders actually started to reprice for the better, and we started to see improvements in pricing throughout the day. The other thing that I look at that really helps me out is this lender consensus. So of these, let's say 100 and some odd lenders, most of the lenders improve their pricing by an average of, let's just say, 0.25% throughout the day. Some lenders made their pricing worse for various reasons, but overall we know that the market improved, and the lenders that started off the day, let's say in the market or more conservatively, improved their pricing throughout the day. And it lists pretty much every lender. I mean, you can see down here on the bottom, it's even showing Freddie Mac, Wells Fargo, Flagstar, etc. So this is what I use. It really helps me to kind of gauge where we think rates might be going, and hopefully it helps to save you or optimize your loan when you're working with me. And that's it.